This is a story of how I took a loan, a 40,000 US dollar loan in order to buy stocks. And I lost money with that loan and I don't even regret any of what I've done. Now, this is a story that I've never talked about before. It's a story about risk management. And yeah, I would do this even again to this date. The day when I took on this loan was in the beginning of January 2021. It was when I decided I don't want to sell my Bitcoin. So at the time, Bitcoin was at around 40,000 and it was still going up very, very steeply, right? We made all-time high after all-time high. And the problem is I didn't want to sell, and the issue was I was dollar cost averaging into Bitcoin for many, many years. Basically, when Bitcoin was at the 20K at around the end of 2017, right, it went down to all the way to 3.5, right? And I started buying at around 7.5K. And I started buying, and every month I bought a little bit in. We crashed down to 3.5. I continued buying, and I continued buying up all the way to that point when we were at 30 to 40K at the beginning of 2021. Now the issue is I am a risk management person, right? And I try to balance out what kind of assets I have, right? I try to have the appropriate portion of my wealth in property versus stocks versus crypto. But when you continue dollar cost averaging into crypto during the bear market, and it then basically almost 10x's, it actually did 10x, right? From the 3.5 to 35K, it did 10x. And suddenly your allocation to crypto is really, really large, right? Your stocks don't move that much. Your property doesn't move that much, but your crypto can very much move massively. And the issue is also at the same time, when crypto goes up, all the hype starts, right? That's when then the Dogecoin exploded. That's when Shiba Inu launched. I think it was roughly around that time. So also when the NFT trading started happening. So it's a time when there's a lot of hype around crypto, and at the same time, you're very heavily exposed to crypto, but you're also not anticipating that it will stop anytime soon. It stopped earlier than I expected, right? The top was at 69K. I sold half of all of my crypto, by the way, at around 50K. But the issue was at that time, right, beginning of 2021, I had too much crypto. I had basically 70 to 80% of all my wealth in crypto at a time when the market was super, super hyped. So I was thinking, what can I do in order to balance out my portfolio, to not have 70 to 80% of my wealth in something super hyped that I still expect to continue to go up, but I don't want to sell, right? I don't want to sell. So that's when I came up with the idea, if I just want a balanced portfolio, I just need to have something more of, right? I need to have either another house, another property, or I need to have more stocks. Now, house transactions are super huge relative to my wealth. They're also very illiquid. It's very hard to buy and sell them with all the tax implications and all the time it takes and all the transaction costs. So stocks it is, right? You simply just want to diversify your crypto exposure with some stock exposure. And that's when I said, okay, I take on a personal loan. So I didn't have much more cash. I did have a very stable cash flow, which I have to this day. So I thought, okay, I can risk some of that cash flow, put this on the line with a personal loan. Interest rates at the time were low, and buy some stock. And I simply just did this for this diversification idea. I didn't want to outperform the market and pick a certain stock that will go through the roof. I already outperformed enough with crypto. So I simply just wanted to have a weighted portfolio, so to speak. So yeah, that was it, right? 40K US dollars. That was the right amount I felt was okay to give this somewhat of a balance. So crypto was still overweight after this, but it didn't feel as bad anymore. And yeah, that's what I did. I bought NASDAQ ETFs, QQQ. So low cost ETFs. I don't have the idiosyncratic risk with that. I still hold these ETFs to this date and basically just balance everything out. Now, that's the thing, right? The stocks themselves went down since then, roughly 10% or so. But it's not even a problem because it enabled me to keep on holding Bitcoin from those 35K or whatever it is to the time when I sold. So it enabled me, even though the stock portion went slightly down, it enabled me to keep on this exposure to crypto while everything was still hyped. So the idea behind this is you want to be balancing your exposure to any particular asset in a way that you feel comfortable holding it through the swings. And whenever you are overexposed to crypto, then whenever there is a little dip, you might be selling because you're panicking, and vice versa, right? When you're very, very low on crypto and you don't yet have enough exposure to it, you've also got a problem, because then when it rises, you start FOMOing in and you think, I should have bought way earlier. So it's important to have somewhat of a balance, and whenever you think something might be overhyped, come up with creative ideas to balance it out without necessarily losing the upside. And that's what I did, and I don't feel any regret at all, right? I am in losses with that position, with taking on a loan. I did pay slight interest on this, right? The personal loan at that time was around 3% or so per annum, lower than it is today. But yeah, I don't regret it, because it enabled me to keep exposure to crypto and sell it at a very, very high level. So that's why I would do it again. And I think it does make sense. A lot of people always say, never buy anything, never buy especially stocks on debt, and don't take on loans and don't take on leverage. But when you're smart about this, I think it does make sense. Of course, it doesn't make sense to take on a huge loan to buy a specific stock, hoping that it goes through the moon and then it crashes and then you're completely burned, right? That's a problem. But sometimes when you use leverage very smartly, it can be a pretty good vehicle. And there is some kind of in the finance community, right? There's at least this idea that taking on debt for stocks is really, really bad. But on the other hand, it's super normal to take on debt for a house. And it's even super normal to take on massive amounts of debt for a house, right? Multiple yearly incomes. But if you would take, say, a quarter of your annual income in debt for stocks, that's in relationship to taking on debt for a property, super, super low risk. But still, people would always not advise to take on any leverage on stocks. But if it helps to balance out the overall portfolio, and it helps you keeping on to a overweighted position that you think will continue to rise, then I think it's a very viable approach to do things. So that's why I think this video might become relevant for some, right? Because if you continue dollar cost averaging in at the 16K, etc., and now we are already at, I think, 26K or so, right? 27K. If we rise in Bitcoin to 40, 50K, you've already got your 3x. And if you bought in often enough, then your crypto allocation might be already way, way higher than compared to your risk tolerance to your other allocations, what you have in precious metals or stocks or property. And when that happens, when your crypto is overweighted, and you also think that crypto, in the grand scheme of things, in the grand cycles, is elevated, then instead of just shifting the crypto and selling the crypto to your other asset classes, you can also just take on a loan and overweight the other asset classes to balance things out. Of course, only makes sense if you do think there is still some kind of an upside potential for crypto at that particular point in time, right? If you think that crypto can move, say, from the 40K to the 80 or 90K, then it makes sense to do something like this. If you already think we've more or less peaked, then of course, I'd rather just directly shift and don't do these funny games with debt. But yeah, this is just another way of thinking about things. I think most people don't really do this. They're not taking on debt in order to balance out the portfolio. I did it and I don't regret it. Even though I lost money on that particular position, it enabled me to take on risk with another position that in the end more than canceled out the losses with that debt, with that personal loan on stocks. If you found this interesting idea, I'm looking forward to see you in the next videos as well. And of course, feel free to join our Telegram and our Discord as well. These links are in the video description down below. Bye-bye.